Okay. Hi. I am Jack Stoch, president of Globex Mining Enterprises. We're a junior exploration company based in Canada, but we're a little bit of a different kind of company and you'll see as we go forward. So I'm just going to get right into it because there's a lot to talk about. Forward-looking statements. You can go to our website and you can see the details on this. What I'd like to do is get you to focus on value. When I talk about Globex, it's a value proposition. It's not just an exploration company or a royalty company. It's a value proposition. So getting right into it, Globex is a company that does basically anything in the mining industry to generate profits. So we have a business of precious metals, gold, silver, platinum, palladium, base metals, all the normal ones, copper, zinc, and so on, often with gold and silver credits. And then we have a whole series of specialty metals and minerals, manganese, antimony, molybdenum, silica, uranium, and so on. So we're diversified. But on top of that, we also have a business of generating royalties through business deals that we do, and I'll explain that as we go along. So we're diversified. We only work in areas of low political risk in Eastern Canada, Germany, and the US. We make money from doing option sales, joint ventures, and royalties. Currently, the company has well over $20 million in cash and shares in companies that are often holders of properties that we hold. So we act as a mineral property bank or incubator. Our specialty, if we have any, is acquisitions. We buy low, we sell high. Pretty old methodology. We take the assets that we acquire, we upgrade them, and then we look for deals, either options or sales. And at the end of the deal, we end up with royalties. And companies pay us to try to earn an interest in our assets. So this income means that we have less shareholder dilution, increased exploration expenditure with no risk for our shareholders, and we avoid debt, while at the same time increasing the value of our portfolio. Just to show you how over time we keep increasing the number of assets. I don't think you'll see another junior company with the number of assets that we have. Right now we're at 249 assets, and I hope by the end of the week to be 251. Of those, 103 are royalties, and those royalties were generated in the large part by deals that we've done where other companies have earned an interest by paying us to earn that interest in doing exploration. The basics of the company: we only have 55.2 million shares out, fully diluted 58 million. That's not very much in the junior space. Management, mainly myself and my wife, we're at 12.4% of the stock. The board of directors, no doctors, no dentists, 3 senior geologists, a mining accountant, and a senior finance professional. We're also, unlike a lot of other companies, we're not on the CSE or the TSXV. We're on the senior Toronto Stock Exchange. We're on a number of exchanges in Germany, including Frankfurt, and we're on the OTCQX International by invitation. The board of directors, I won't go spend much time on this, but 3 geologists and 2 finance professionals. You can look at the details of these people as we go forward. So the breakdown of the 249 projects, 124 are precious metal projects, 69 are base metals or polymetallic, 56 are specialty or minerals and elements. Of those, 103 are royalties. We have 8 active options where other companies are paying us cash, share payments, doing exploration expenditures, and at the end of the story, we end up with what is called a gross metal royalty. Now, just to explain, a gross metal royalty is different than what you've probably used to, which is net smelter. A gross metal royalty is the percentage of the metal or the element produced. So for example, if 100 ounces of gold are produced and we have a 3% gross metal royalty, we get 3% of the gold produced. No expenditures taken off against the production. Most of our projects are quite advanced. 55 have historical or NI 43-101, and 40 of those had former mines on the properties. Just to show you the distribution of the properties, the larger map in the center is the Abitibi of Quebec and Ontario. The dashed line is the line between Ontario on the west and Quebec on the east. Black lines are major fault structures. The gold stars are gold properties that we own. The blue stars are polymetallic or base metal projects that we own. The red stars are critical metals or minerals, and the green diamonds are industrial minerals. So you can see in the Abitibi, which is the most prolific area of Canada for mines, we have a lot of properties. Now, if you go up to the northwest, you see the white area, that is that large gray map. We also have a lot of properties in the rest of Quebec, in New Brunswick, Nova Scotia, in Washington State, Arizona, Nevada, and down in the bottom in Saxony, Germany. All these properties, all of our interests, we own. And one thing I should also state is when you look at our financials, we, unlike other companies, we carry our properties on our books at zero value, even properties with resources and reserves, even properties which are generating income. So the criteria, the properties that we acquire, we look for properties that have historical or NI 43-101 resources, drill intersections of economic interest, past production, mineralized showings or drill targets. Locations of the properties should be within established mining camps or on trends. So we don't do grassroots exploration. All of our properties are advanced to one degree or another. Some examples of some of the things that we've acquired and done deals on recently, a series of gold mines called Frank. I'll go through details on these a little bit later. Francoeur, Ironfield gold mines west of Rouyn-Noranda, Montalembert, high-grade gold on surface, Dalhousie, multiple copper and nickel zones, and now they found lithium on the property. Uranium projects in Quebec. We have two very large projects. We've optioned one and we got another one, which we'll be announcing a deal on shortly. Lots of high-grade rare earth properties in Quebec and in Arizona, gold deposit in New Brunswick, spodumene, lots of lithium in the Abitibi and also in the James Bay area, and scandium at the very east boundary of Quebec with Labrador. Just to give you a couple examples of some of the deals, I mentioned the Francoeur Ironfield project. Agnico Eagle have the Wasamac deposit over here on the east. We have all the area here in the black rectangles. We've sold this project to what is now Agnico Eagle for $15 million. Our total expenditure on the property was $2 million. So a profit of $13 million on that property. They are working on it. They're drilling. We retain a 2% gross overriding royalty. In other words, if they put one of these deposits into production and all these little squares are former deposits, then we get 2% of the gold produced. This is an area called the Joutel mining camp, just to show you how we have a long-term view. The Joutel mining camp has 4 deposits in it: the Eagle mine, the Telbel, which is just an extension of the Eagle mine, the Joutel copper, and the Poirier, which is a copper, zinc, silver, gold project. Over a series of years, we picked up the Eagle mine, which then we did an option deal with a company called Maple Gold. They're paying us cash, shares, doing the exploration. We retain a royalty. We have done a deal on all a part here that is outlined in blue with another company called Alamos. Alamos Gold, they're a producing company, and they are, again, paying us cash, shares, doing the work, carrying the project forward, all of this and this area here. We have 2 other deposits in the area, the Joutel copper mine and the Poirier mine. We're looking for partners to carry those forward. Plus, some ground came open along strike of this horizon, which is the gold-bearing horizon. And we have a number of targets here that we actually are looking at drilling ourselves to see if we can upgrade the project. Another example, a company called Labyrinth have this property. All the cash payments have been made. This property already has 3 million tons of 5 grams gold, or about 500,000 ounces, using a cutoff of 3 grams. Now the cutoff, this was done a number of years ago, the cutoff would be lower than that. There's a ramp, there's 3 levels, lots of high-grade gold underground. They've done drill programs. expanding it. They're looking to put this property into production. We retain a 5% gross overriding royalty on the first 25,000 ounces and a 3% gross overriding royalty and all the production thereafter. Another project, lithium, just going to show you some of the diversification. This is in the James Bay area. We did a deal with a company that was carrying this forward, Brunswick. They was a 5-year deal. They were going to pay us $500,000 in cash, half in shares, half in cash, over a 5-year period. They will also, once at the end of the 5 years, or when they pay the total amount, they have to pay us $100,000 a year in advance royalty. The blue is the area that we have. We kept a 1 kilometer area of influence, so anything found within that area is part of the deal. Very first program, they hit in multiple holes. They said, what the hell? They paid us the full $500,000 up front and are going forward in exploration on the project. Another lithium project, this one is in the Abitibi, Sayona. They have a mill nearby. They're looking at putting this project into production. This is their concept open pits to carry this to production for feed to their mill. There's already over 100 million tons outlined. Chibougamau mining camp. This is an interesting story. We picked up this half of the main Chibougamau mining camp, which is the area on the east. And then over time, we picked up a large package on the west. We have done now a deal with the company Tama Gold at the end of this month. They are looking at purchasing the area in green for a total of $11.5 million payable over 3 years. So that's a good payday on that. They've already done an option agreement on this area over here, which has got payments every year, cash, shares, and work commitment, with us keeping a royalty in both. That's a 2% gross on all this, a 2% gross on all that. This area here, interestingly, we sold that property to a company which now it's called Cerrado. And there is over a 1 billion ton iron deposit, open pittable, and we retain a 1% gross overriding royalty on that project. You see, this is where the open pittable areas are. Big, big project, good revenue potential, and you're talking about an NPV post-tax of $1.6 million US, with post-tax payback of 1.8 years, post-tax IRR 43%. So great project. Just to show you the significant potential of that camp, and this is just one of the properties in the camp that was explored for zinc. And you can see here, these are intersections of zinc from historical drilling. But they didn't, at the time, gold wasn't worth very much, silver wasn't worth very much, but look at the gold values. Look at the silver values. Pretty significant. So this is now, in modern day, is a gold-silver project with a secondary zinc rather than just a zinc project. These are the kinds of gems that you can find on the property. We've done a series of exploration programs, and we've discovered a new gold deposit called C3. This is another project just showing how location is important. One of the main gold localizing structures is called the Cadillac Break, which you see crossing this property outlined in red. These green dots that you see are actually the collars of drill holes. On the far east, there is the Hava West and Hava deposits. We have a royalty on that. We were able to buy the area outlined in red from a major corporation. And we have done detailed geology, geophysics. We've come up with targets. We've done rock geochemistry, and we're going to be in there this summer. We actually are on the property, and we're going to be doing drilling. We think we can do a drill program which will significantly increase the potential of the property. And you can see how different owners make a difference. All this density of drilling here, when they hit the boundary, very, very little drilling. So that means a lot of potential. More grassroots property. This is a property up on the way to Chibougamau, near a town called Waswanipi. This area here on the map on the right is this little area down here on the bottom. And historically, there was an area where 123.4 meters ran 20.8 grams gold. We went in, we did mapping, we did stripping. We did a deal with another company. They carried it forward. Stripping got values up to 3,310 grams over a meter in channel sampling. The sample you see on the bottom left, that is a bit of the rock from that channel sample. You can see the gold just sticking right out of the rock. Up on the top, talking about sticking out of the rock, this is a sample grabbed on surface from the galena vein. And you can see here, gold sticking literally out of the rock. Lots of potential. This is a property where we hold a royalty. This is one where we bought a royalty from a defunct company. It's a 2% net smelter. This property is now owned by Radisson. They are currently drilling. There was a former small-scale mine on the property. You can see the shaft, underground workings. They've been drilling, hitting high-grade gold. All these areas, colored areas, are areas where they've intersected gold. And they've got 1, 2, 3 trends of gold mineralization open to depth, open, open, open. And they are drilling, adding value. We sit back and reap the benefits of their work. The property is also open all the way farther to the east. And if you get to the east, that area I just showed you with the 2% NSR, that's a Kawagama property. We own this area here 100%. We have the Cadillac deposit, the Wood deposit, and then we discovered a small zone. It's only 243,000 tons, but it's grading 17 grams, so half an ounce. That's over 100,000 ounces, 120,000 ounces, easily accessible. Again, showing how important localization is. The yellow is the Cadillac break. These little squares are former producers on the break. We also hold a 1% NSR on the New Alger, which is also owned by Radisson. So Radisson owns all the ground from here to there, and we have royalties on half of their ground. They do the expenditures, carry it forward. This is a property called Duquesne West. This is on what's called the Porcupine Destor break, which is the second large gold localizing structure in the Abitibi. We've optioned this property to a company called Emperor Metals. It's a 5-year deal, 10 million in cash, 15 million shares, 12 million in work over 5 years, and we retain a 3% gross. There already is uncut 853,000 ounces of gold outlined. That's 4.17 million tons, grading 5.42 grams or 6.36 grams uncut. Another one along a splay of the Porcupine Destor break. This is one little snippet from a very large property with numerous gold showings. There was a ramp put down. There are 5 zones in this area outlined, showing over 700,000 tons of 8 grams gold. So there's access to it. It's been stripped. There's an area open pittable, outlined here in the red. 270,000 tons, 3.5 grams, or 41,000 ounces readily available. There's a mill about 10 kilometers to the south, so the stuff could be mined and possibly processed at that mill. Show you just something that is a little bit of a different kind of project and one of our more oddball projects, but extremely valuable. This is circular structure, is a rock unit that contains scandium. Scandium is used as an alloy for aluminum. When you put a little bit of scandium in aluminum, you can weld it. Normally, you have to rivet aluminum sheets together. But if you have a bit of scandium, you can weld it. So if you're building a plane, for example, and you're making an aluminum shell, instead of having all that labor and the extra weight of the riveting, it's faster, it's more solid, and cheaper to build if you put a bit of scandium in. Well, the company over here has been working. They've outlined a 21 million ton deposit, and they want to carry that to production. We have half the structure, the area outlined here in the black rectangles. All the little blue diamonds are mineralization, scandium and rare earth mineralization shown in the pink. on our property on surface, and the grades of the scandium that we have in our grab samples on surface are the same kinds of grades that they have in their deposit over here. So again, a very valuable project. We do a bit of work and we increase the value. In this case, as they work, they increase the value of our asset. I'll just show you a last project. This is the one in Germany. We have 165 square kilometers of ground in Saxony. We picked it up after doing research on silver production in Saxony. And you can see here all these areas with the red stars are areas of former production. We calculated the silver production. There's also lead and zinc, but the silver production over a 750-year period, all pick and shovel. There was no modern mechanized work, all literally pick and shovel, of over $500 million of silver produced in this area of Saxony. So we acquired the property, we did a bit of work on it, then we did a deal with a company called Exelon. They have done 2 drill programs. You can see all these areas here. They have found significant silver mineralization. And as a matter of fact, in one of the cases, they have gold mineralization. So that'll be stop there. I'm sure Julien is happy that I've excluded some of our projects because we just have so much. You realize I can't cover everything. It's just to give you a taste of what we do. So the things I'd like you to take away in the concept of focusing on the value, we have very few shares in the company, only 55 million shares out. And the company's been around for 40 years. We have never done a rollback. So we're very careful not to dilute our shareholders. The board, 3 geologists, 2 finance professionals, serious people. We have income. That really sets us apart from other companies. We actually make money. We're not always going back to the market diluting in order to do more work. We own our properties. All of those assets, the 249, including our office, which you can see in the picture. Well, actually, you can only see a small portion of the office. Our core facilities, we have surface rights in various areas, vehicles and so on. We own everything. We have no debt. We have the funds available to do exploration. Like I said, well over 20 million. We're actually around 25. We only work in areas of low political risk. Eastern Canada, although we just recently expanded into Saskatchewan, where we've vended 5 sodium sulfate properties for these new sodium ion batteries to a company called Edison. And we also work in the US and in Saxony, Germany. And again, as I said, 3 senior geologists, a mining accountant, a senior finance professional. The model is really different. It is a money-making model. It is a don't dilute your shareholder model. And one last thing I would mention, when you look at our financials, I may have mentioned it before, we carry all of our properties on our books at 0 value. Unlike other companies, where if they buy a property for $500,000 and they do $2 million in work and they find nothing, they carry it at $2.5 million on their books. We carry all of our assets as 0 on our books because that means that we don't have to pay auditing fees to establish a property value every year. So that's why we do that. So again, thank you very, very much.
All right, Jack, that was a very, very interesting presentation. As usual, yes, I'm very happy that you limited the amount of properties you did and that you had a special piece on the German assets, which obviously is always interesting for European investors. Maybe one thing, you said that you're coming to maybe adding a deal in the near future. How do you see the landscape of deals and values of what's on the ground and property changing within the next months and within the next few months? Are we seeing an increased value with, for example, the price of gold reaching all-time high, or are properties still quite undervalued when you come in and try to acquire one?
Well, our specialty is to look for those undervalued assets. That theoretically, that's what we're really good at. There are still a lot of undervalued properties available at the moment. The junior sector has not really revived. It's starting to revive because of the price of gold going up, the price of uranium going up, and the price of copper, those particularly. You're starting to see it, but it really hasn't taken hold yet. There's still a lot of junior companies that really haven't got the funds, but their assets are increasing in value. So it's making the job of finding assets a bit more difficult, but we're still doing it and achieving that. But on the other side of the equation, it means that we can get superior pricing for the assets that we do deals on under our option agreements or our sales. So we generate more revenue. We have to work harder to find the assets for future sales. But at 249 projects, it's not like we're starved for projects.
Well, I think this is one of the point also that I was trying to highlight here, is that you acquired all of those at a moment where the market was at its deepest or at its lowest and so on. And so therefore you do now have a very, very, very nice upside that is that might realize within the near future or the near or midterm. Something else in mind, actually. So you were discussing value in the books of the property that you have. I'm not sure every investors understand exactly what you mean, but you have it at zero versus company that have 2.5 million, so on. And what are the consequences of that?
Well, the negative consequence of that is when people look at our books and if they look at our financials, they see all these assets and they see that our carrying value is zero, they go like, oh, well, they can't be worth anything. The reality is they're worth a hell of a lot. Even, for example, that one, the Duquesne West, where we have like a deal for $10 million in cash. As a matter of fact, we just received another $500,000 in cash from them. We got another $300,000 in their shares on our Francoeur property. We're getting another $3 million in June. Anyway, for example, that again, to that Duquesne one, despite the fact that we have a deal which is going to generate a lot of revenue, despite the fact that we have a good royalty, despite the fact that there's 853,000 ounces already outlined and they're drilling and they're establishing more ounces, we carry it at zero. It's obvious that the value is there, but people, unless they do a deep dive, they don't get it. The reality is, as a corporation, every year when you do an audit, you have to sit down with your auditors and establish a value for your asset. So if you got one or two properties, you sit down, and remember, we're paying the auditors to do this.
And a big amount of money for sure, yeah.
Right. So we're paying them to argue with us about the intrinsic value of a certain asset. So it started to get up into the hundreds of thousands of dollars. And I had to make a choice where I wanted to give money to the auditors, or do I want to put the money in the ground or use it to acquire other assets? So I made that choice. It's hopeful, that's why I keep mentioning it whenever I do a talk, that we do carry everything at zero. And it's really I think it's one of the things that is really a bit wrong in our industry, in that companies that have a property and have spent a lot of money and they found nothing, they still carry it on their books at a certain value. And it's a bit of deceptive. It's unfortunately, it's not their choice. It's the way that the system is set up. But I think our approach is a better approach. Is it a great approach? Not great, because it makes it difficult for investors to really understand value. If we put that in there, it would be hundreds of millions of dollars actually in value, but we show it at zero.
Exactly. Well, one thing I can give is, first off, time is up. So thank you for the explanation. But the one comment I had on that, I'm myself being on the board of many publicly traded companies and so on, the audit time and the value that you put into one is a headache, especially if you have 2-3 jurisdictions on top, different project, and then you start having jurisdiction in Europe with a different set of accounting that you recognize, that you come, that they have exchange rate, this and that, and so on. And at the end, you're just battling each and every day. So I think that it proves again how your management is taught about being efficient for shareholders, and actually not trip in the flower of the carpet, but actually getting job done. So I think this is another time that it's proven that. for your company. So Jack, thank you very much for the time. Thank you very much again for the great presentation. We're following up, and cash flow and money making is always very good and appreciated. So thank you very much for your time, Jack.
Thank you. Take care.
Take care. Bye-bye.